Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour on AM 560.
The Answer. Well, Steve, this is the part where we're coming to your blog.
Okay, one of those I understand.
Choose which one you like and go with it.
Remember that the blog is found on ChicagoTaxTeam.com.
Is there a phone number that goes with that?
Which is Opum Tax Resolution and the law office of Stephen A. Leahy, who are our sponsors here. And you can call them at 312-664-6649 if you have any tax issues or any other debt-related issues. So today I'm going to talk about the article that I wrote this week. And I'm kind of going with my theme in the last couple of weeks, which has been about tax preparation, right? We're preparing. It's the first of the year. Everybody's worried about their taxes. January 20th is the date when you could start filing your tax returns. If, of course, the IRS can stay open that long.
That's another segment.
That's the next segment.
That's a teaser, ladies and gentlemen.
So the IRS, I'm going to talk about audits today and the 9 things that can happen to cause these red flags. Now, we've talked about audits before on the show and what happens and the technicalities and how the IRS goes about it. They have algorithms where they go through it and they go through all of the
algorithms
of the tax returns. Remember that most of the tax returns now are filed electronically.
That's right.
So they go through them electronically, and they go through a lot of this to find out which ones they're going to audit. And so these are the red flags. The IRS calls an audit an examination of returns. And so because they got fancy names for everything over there.
Yeah, then they say cough.
So I have 9 things that will cause an IRS, the red flags to the IRS to cause an audit. And the first one is make a mistake on your tax return. Okay, so nowadays we use software, so all the math, there shouldn't be math errors because that should all be taken care of through the software, unless you're still one of those people who are doing it by hand, and I don't know why. But if you have math errors on it, that's certainly going to cause a problem with the IRS, and they're going to look at your return. Another thing that might cause it is, and again, this goes before electronic, is did you sign it? People would fail to sign it, and that would cause a problem. Another big problem is people don't put the right Social Security number down, either for you or for dependents, because you have to put your dependents' Social Security's number, and maybe sometimes people transpose numbers or forget to put it down, and this causes the IRS to take a look at it and see why it comes up. The second thing is if you're filling it out and you round off all your numbers. Okay, so in the real world, things don't happen in round numbers. So if you're trying to fill out your tax return and all my deductions are in round numbers, that kind of tells the IRS he's really not using accurate information. So they look at, wait a minute, this isn't right. So if you're doing that, that's going to cause the IRS to take a look at it. Another problem is
even if you round up to the higher number.
Yes, because they don't know if it's higher number until they audit you, and then they'll slap you on the back and say, "Thank you for paying more than you had to."
And we'll give you your money back.
Yeah, sure they will. Next thing is to file late or don't file at all. Right? If I file with everybody else, there's all of these returns are going through. They don't have time to look at everybody's return. A very small percentage are going to be audited. But if you file late, you're the only one filing. So they're going to take a look at it. Or if you don't file at all, and we talk a lot about on the show about what they call it SFR, a substitute for returns. So if they think you owe money, they'll go back and they'll file the return for you. And then you'll want to go back and amend it. Well, guess what? If you amend the return, you're going to have a person looking at it and looking at every entry and deciding whether that's accurate or not, and then asking you for substantiation for every entry. Very onerous and time consuming. Another one is to be a tax protester. Okay, take the position that the IRS doesn't have the authority to tax you. And then some of them fill out tax returns and they just say 0. I don't owe you anything because you don't have the authority and I'm not paying you. Okay, guess what? You're going to get audited.
Yeah. What was his name?
Wesley Snipes.
Yep. I'm not going to even say those men are black.
I knew you were going to say that because he's the notorious tax protester who doesn't protest any longer. Now he's paying his taxes because he spent 3 years in the joint. In the joint. That's correct.
It was an easy joint, but it was a joint.
Here's another one. Have unreported foreign accounts. It used to be
if it's unreported, how would they know?
Well, because you don't report it. Nowadays, the foreign banks or foreign financial institutions, they're reporting it. Remember, it used to be you could put it in a Swiss bank account and they'll keep their mouth shut.
Really?
But they don't keep their mouth shut anymore. Now they're reporting all Americans who have a account with them. They report it to the IRS. And so if they report it to the IRS and you don't, you're going to get audited because they're going to find out what's going on and they want to know why that money's being hidden and they're not getting their end. And the penalty for this now is extreme. In some cases, it's 70%.
It's 110%. You owe us 10% more than what
they'll take you're being a little facetious, but not too much.
No, I'm not.
Okay. Another one is don't report some income. So if you're doing 1099 work and you report some and not others, again, this is all reported. Now, the IRS several years ago started, if you pay anybody more than $600, I have to send them a 1099. And so the IRS knows that you've been paid. And if you don't put it down, the IRS will know you didn't put it down. And then they'll look at your return because they'll say, wait a minute, it's not all here. You're not telling us about this income. And then they'll think that there's other things, and then they'll take looks at your deductions. The whole thing is to stay under the radar system.
You don't really have children, do you?
You'll have to prove it. That's right. Here's another one. Claim large charitable contributions. Okay, so you can take charitable contributions. There's nothing wrong with that. But if you take a lot of them, even though you've given a lot, they're going to contact you by mail and say, send us all the proof. Because these numbers are large, and if you can prove it, if you have all of the documents to prove it, they'll allow it. But generally, what happens is you don't have all the documents to prove it, and so then they won't allow it. And now you've just created a problem for yourself because they're going to audit the rest of the return also.
For how many years would they do that?
Generally, the IRS has 3 years that they can go back and look at your return.
But
unless you've underreported by 25%, and then they have 6 years to go back and look at your return. Okay, so next one, take repeated loss on home-based business. Okay, so we talked on this show before about the difference between a hobby and a business. And people sometimes start a business or they treat their hobby like a business, and they start making all these deductions. I think we talked about a professional bowler who wanted to go bowling and took all of his bowling material off on his taxes, and the IRS came back and said, no, that's a hobby. You can't deduct all of that from other income. And but there's this is not a hard and fast rule, although the IRS. The rule that the IRS uses that they will look at your return as if you've taken a loss for 3 of the last 5 years. So you have to show a profit at least a couple of times before the IRS will accept it as a business rather than a hobby. And you can go to court and fight it, but that's very expensive and it's probably more than what you're trying to deduct. Yeah. Okay, so the ninth and final one is. And there's a lot more than these, but these are the ones I thought that were the most important, is use an unscrupulous tax preparer. Okay, so what happened, I've had people, next week we're going to talk more about what bad tax preparers can do to get you in trouble. But one of them is when you're using unscrupulous tax preparer, once the IRS gets wind of it, they're going to audit everyone that they've ever done a return for.
I can think of one more, Steve.
What's one more, Jim?
If I wanted to start a conservative C3 nonprofit organization, that
true.
sets up red flags. And we have a story of one waiting 5 years
because they're icky. But that's a different thing than filing your tax return. But I agree with you.
I got a story about that. We'll talk about that in another section. But I just wanted to bring that up, which is one of the reasons why we have the IRS saga that we go through.
That's right. So next week we're going to talk about tax preparers and and what to look for there. And if you need a tax preparer, then you should probably call my office at 312-664-6649 because we prepare tax returns. That's one of the things that
Weren't
we
you
always
offering
do.
something? Is there a deal?
We have what we call the IRS protection plan, and this is really geared for people who have installment agreement or have been found currently not collectible or have had a offer to compromise with the IRS. So even if you had it with somebody else, you still should contact us because we need this. You got to stay in compliance. We talk a lot about that on the show. Compliance. So give us a call at 312-664-6649. Visit us on the web at chicagotaxteam.com.
Be right back.